Hey, what's up? Tim Sykes here. As I'm filming this, the S&P is down roughly 2%. The Dow is down nearly 500. It looks like we're going down a little bit. And we've been bouncing for, basically, what, a month and 10 days since the big, kind of scary dip here. And you could say that, okay, all of this bounce is kind of just some consolidation from the downside. Now we have a whole bunch of issues from politics to data breaches and Facebook to different stuff with the economy. You have to be very careful right now. This is not the time to play hero. And aside from just trades, I put out commentary. This is some commentary in my chat room. I encourage you to be in it every single day. And when you're in there, guess what? You don't just get commentary from me. Especially if you're in my Millionaire Trading Challenge chat room. Ducks made $100,000 on Friday. Roland made $6,000 today. Tim Grittani and Mark Crook and Michael Good, we're all in there. But let me just show you some of my commentary because, frankly, I think it's useful. I traded a little bit on CRON. It really wasn't breaking out to new highs like I wanted it to. So I basically got out. It was a scratch. And, it still could be a first green day. CRON, this is a pretty decent pattern, especially on a recent runner. But when the market is down, you have to remember this. And I said this when the Dow was down just 300. Remember to protect longs. 3 out of 4 stocks follow the overall market. And a lot of people forget this. A lot of you guys just trade, oh, this stock will be fine. Oh, the news is good. Oh, the pattern is good. You have to be careful with the overall market. Not always, it's not 4 out of 4 stocks follow the market, but the majority of the time. And I think especially right now that we're, frankly, in this decade-long bull market, we have not had a sizable dip. I mean, everyone was scared just a little over a month ago with this little thing, okay? Just put this in perspective. How little dipping we've had since basically for a decade. So I think now is the time to be a little more cautious. I think anybody who is aggressive, aggressively buying the dips, you might do decently, but I don't think it's worth the risk. There's a risk reward to everything. And too many of you guys judge a trade based on how much money you make. But it's not just about how much money you make. I mean, if you make a little bit of money and risk your entire account, it's not good. I know literally hundreds of gunslingers who tell me, Tim, you're too safe, you play it too cowardly. And guess what? Every single one of them has lost 50, 75, or even 100%, sometimes even more than 100%. If you short a stock too soon, you can actually go into debt. But every one of them has lost way too much money. They might get ahead a little bit in the short term, but in the long run, they have all lost and lost big. So when I see that, because I've been in this game for 2 decades, I want to try to keep you safe. That means that I will be taking gains a little quicker. I will be cutting losses a little quicker. But you have to keep everything in a kind of historical perspective. This is the mistake that a lot of Bitcoin and cryptocurrency people made in the past few months as Bitcoin has dropped, 60%, and most of the other cryptocurrencies have dropped 40, 50, 60, sometimes even 70, 80, 90%. You have to be careful. What goes up also comes down. And stocks, cryptocurrencies, real estate, any kind of investment don't just keep going up forever, especially when you have these ridiculous runs. Now, does this mean that the S&P 500 and Bitcoin is going to continue crashing? No. I don't care. I'm not trying to make a guessing game here, okay? I'm not saying, oh, this is definitely the top. I'm not on CNBC with some bullshit predictions and some power suit trying to lure you into my asset management firm while taking 2% and pretending I know everything when I don't. I don't manage anybody else's money, okay? I've only made a few $1,000,000 in my life in the stock market. So you can take it or you can ignore me. But I will be safe. I will monitor the overall market. I will cut losses quicker than normal in this current market. I will continue updating my chat room. When I see, the market's going down, I go into ultimate protection mode. And so far that's served me well and my students pretty well. I've gotten a few messages of you guys who did protect your longs before the Dow and the S&P and all these tech stocks really cratered more. Safety first. is kind of what I'm into right now. I'm always into it, but now especially. And I know that's kind of weird considering I'm a penny stock day trader, which is like the opposite of safety. But this is how I've made my millions over the years. I actually just did the math, because I've been trading for roughly 20 years now. I made $5,000 last week. I've been making roughly $5,000 per week for 2 decades. Roughly $250,000 a year. That's what I've been averaging for 2 decades. And sometimes I trade with bigger accounts, sometimes I trade with smaller accounts, but pretty much it average out to $250,000 a year, which is puny in terms of Wall Street. But you also have to remember that I'm trading from a lot of third world countries. I'm trading with a small account because I like living too. So living, safety, profits when there are good odds. I think those are good kind of instructions right now for this current market. Leave a comment underneath this video saying, I promise to be safe. And I want you to actually, follow that promise, okay? Write it out and then hold yourself accountable. I promise to be safe. 5 words, and I will see you guys in my chat room. I'll alert you to any great plays, but also remember, be safe. Thank you.